Now, here is Ticky Fullerton on Your Money.
Hello there, I'm Ticky Fullerton, every night bringing you a full hour of the very best in business coverage across the nation and internationally, especially where business and politics meet. Coming up, top economic historian and advisor Niall Ferguson shares his latest thinking on the US midterms, trade wars, and how another financial crisis would be far more difficult to fix than the last one. Rates on hold again. We'll get some analysis from AMP Chief Economist Shane Oliver. And Energy Minister Angus Taylor calls business to a round table and wheels that stick. The Australian's Perry Williams on what the government wants business to do to shore up power for all Australians. The only real law of history is the law of unintended consequences. These are the words of arguably the most famous living financial and economic historian, Niall Ferguson, who spoke at this year's World Conference of Accountants to a packed audience of thousands today. Ferguson is not only a prolific author and commentator, he now runs his own global advisory business to a very exclusive group of private financiers and asset managers, think hedge funds. These are for the folk who regularly take huge positions in markets and need the best intel that money can buy. Today, Niall Ferguson was sharing his insights on the financial crisis and the state we're now in as we return to more normal macroeconomic settings. And they're anything but predictable, his views. Why didn't the crisis, which was indeed just as bad as 1929, not lead to a financial apocalypse, a Great Depression? What was a key factor that people overlook that helped avoid a depression? And what were the unintended consequences of the GFC, and how was that handled? Well, one of those unintended consequences, Niall Ferguson argues, has been the rise of populism. And remarkably, it's been almost always the far-right populists rather than the far left. Trump versus Bernie Sanders, but also in Brazil with Bolsonaro, who Niall Ferguson tipped quite early, but ended up on top. The reason, he says, is that essentially they have a much better story to tell, not just to stitch up the bankers, and string them up, but let's blame immigration, free trade. Let's make America great again. Mr. Ferguson warns that as we come out of the cocktail of quantitative easing, that the winter is coming for highly leveraged economies where real interest rates are rising, and he's keeping a close eye on China. But back to that law of unintended consequences, he says that while we've dug ourselves out of the hole of the GFC, not only have we lost the central bank buffer by keeping rates so low for so long, but the thick layer of regulation now in place is both a brake on economic recovery and, more importantly, now makes it very hard, if not impossible, for the Federal Reserve to deal with another crisis where financial institutions fail on the watch. May that day be a long way off, of course, but in the meantime, we're coming off the meds of quantitative easing and apparently heading back to volatility, which will be a new and not necessarily easy experience for anyone who's been in the markets for under 10 years. Well, let's go to that interview. I caught up with Niall Ferguson on the sidelines of the World Congress of Accountants Conference in Sydney earlier today. Niall Ferguson, welcome back to Australia.
Great to be here.
Now, I want to ask you about that fascinating analysis that you've just delivered around the financial crisis. But first, you're now based on the West Coast. What sort of impact are the midterms likely to have on America?
Well, it's interesting. Considering how much negative press surrounds President Trump, foreign observers would be forgiven for expecting a blue wave of massive Democratic gains. But I'm not sure that's going to materialise. It seems pretty likely that the Democrats will win back the House of Representatives, but it seems highly unlikely that they'll win the Senate. In fact, the Republicans may increase the majority in the Senate. So it's quite a mixed picture. And I think that may come as a surprise to people who are expecting a huge backlash against President Trump.
If that happens, what are the implications for what Donald Trump will be able to achieve?
Well, I think some people would just conclude it's gridlock and nothing's going to happen domestically for the next 2 years. That's possible. I think a lot depends on how the Democrats in the House handle it. Nancy Pelosi is a pretty experienced player. I don't think she's going to listen to the hotheads on the left of her party who want to impeach Donald Trump right away. And it's possible that there could even be cooperation on issues like infrastructure. It's worth remembering that one of President Trump's big policy pushes this year has been China bashing, imposing tariffs on Chinese imports. Democrats are actually more sympathetic to that policy than most Republicans, who by and large have been pretty keen free traders. So there's another way in which you might find some cooperation. But I'd be sceptical about a really big bipartisan outbreak of affection. I think there's just too much animosity towards Trump within the Democratic Party, and the base of the Democratic Party has really been energized in the last 2 years. That's one reason that I think they will win control of the House of Representatives. So much more energy amongst voters, and also a lot of new candidates who are capturing that energy, many of them female candidates. So Nancy Pelosi may want to cut deals with President Trump, and Trump may want to cut deals with her, but it may be difficult from the vantage point of the Democratic Party base.
You mentioned China there and the current trade tensions that there are. We've just been hearing in the last day or so that there might be a hint of some sort of deal, or at least not going further. What's your take on what will happen in South America? Well,
President Trump does like to play with the media, doesn't he? And with the midterms approaching, I think it was quite tempting for him to say, oh, you know, we might after all cut a deal when we get together in Buenos Aires, Xi Jinping and I wonder. I think once the results are in from the midterms, it may be that the incentive to do that deal goes away. There are lots of people pushing President Trump in the direction not just of a trade war, but a Cold War with China. And this has escalated far further this year than anybody would have predicted a year ago. So I think the base case, the most likely scenario, is that the tariffs go on and up until all Chinese exports to the US are under some kind of tariff. And I think Buenos Aires might be a photo opportunity, but not a meaningful deal. But, you know, who can really predict President Trump? That's part of the reason he has the media where he has them, that we just can't really second guess this man.
Let me take you back to your talk on the financial crisis this morning, and in particular, the point you made about why the crisis didn't lead to a depression, didn't lead to financial apocalypse. You mentioned, of course, the role of the central banks, of fiscal policy, but the importance of China, I thought, was fascinating.
Well, I think most explanations of why we didn't have the Great Depression in the United States focus on the role of the Federal Reserve and, to a lesser extent, the role of the Treasury. In other words, it was monetary policy, quantitative easing, zero interest rates, plus at least some stimulus from the fiscal side that had avoided the 1930s happening all over again. It's worth emphasizing that it was really scary. 2008, 2009 was as bad as 1929, 1930.
Yeah, you reminded everybody sitting there in Davos.
I don't think that people in Australia perhaps realised how serious the danger was, because this country has had an incredibly good economic run. But the point I wanted to emphasise today, and I do it in my new edition of the book, The Ascent of Money, is that China was as important as US policy in avoiding a Great Depression. China did a massive stimulus, mainly for self-interested reasons. They did not want a slowdown in 2009. But that expansion, this massive credit splurge that led to all kinds of infrastructure investment all over China, was a big win for countries like Australia, exporting commodities to China. With the rest of the economy of the world in crisis, China came through as the buyer of first resort, and it was a huge buyer for commodities, drove commodity prices up, and it helped Australians basically dodge a global crisis. You talk about the GFC, but I always notice that Australians talk about it almost affectionately, because it really didn't hurt this country that much. China's a big reason for that.
Okay, now, you also said that really the only law of history, financial history, is the law of unintended consequences. And actually, one of those unintended consequences was how the bailouts helped a certain sort of people, and didn't help, don't they? Helped the owners of stocks, the owners of assets, and not the losers.
I think when we look back on what it was that the Obama administration did, you could say from an economic point of view that they did okay. They certainly stopped the economy from going into free fall, but the recovery wasn't tremendously strong. It kept undershooting the projections. And because the resources were targeted at bailing out the banks and making sure that the stock market and other asset markets, including housing, recovered, the beneficiaries were disproportionately the wealthy wealthy elite. And I think that paved the way for the rise of Donald Trump and the big populist backlash that we saw in US politics, that the argument that ultimately it had been the wealthy elite who had benefited became a potent argument in the run-up to the 2016 election.
So populism then rose not just in America, around the world, through Europe, Bolsonaro in Brazil, which I know you call very well. Why is it that the right, and we've had right and left populist parties, the right seems to get into power more often?
Yeah, it's quite surprising, isn't it? Because the populists of the left always say we should jail the bankers, wicked Wall Street or its equivalents, and yet that's much less politically effective than what the populists of the right say. The populists of the left succeeded in really only Greece. The populists of the right have a completely different story, which is this financial crisis and all the other things you're annoyed about is a consequence of globalization, and that manifests itself in unrestricted immigration, it manifests itself in too much free trade. So Trump's approach, which was bash Mexico, bash China, was much more potent in the end than Bernie Sanders's, which was essentially to blame the bankers. And I think when we look back and try to understand why the populist backlash was mostly a backlash to the right, that's been true in most European countries, it's true in Brazil. I think that's because the populists of the right have a more compelling narrative. They spread the blame in a more creative way than the populists of the left, who just want to lock up bankers. And that's strangely less satisfying than make America great again, build the wall, lock her up. The reality is that the populists of the right historically tend to do better after financial crises because they have a more colourful story than the populists of the left.
And no real populist success in Australia so far?
Well, I have a theory about that, which is not entirely serious. I mean, I made it somewhat ironically the other day, that you don't have any prime minister for long enough for populism to get ahead of steam. I mean, we had 8 years of Obama in the United States, which was ample time for people to become deeply disillusioned with the Democratic Party elite. Whereas if you change your prime minister on an annual basis here, which is the Australian way, it's hard to get worked up about someone who's going to be gone in 12 months.
Going back to recovering from the crisis, now we've come full circle, as you say, we've come off the meds with a tightening of policy, QE, zero rates ending, also China turning off the leverage. You now see a period of volatility.
Yes, I think the best way of understanding quantitative easing and all the unconventional monetary policies of the last 10 years is as a kind of sedative. Medication for the world economy. And the way that the medication worked is best understood as a kind of anti-volatility medication. So we were on the meds for quite a long time. And one consequence of that was that volatility in asset markets, particularly in the US stock market, came way down to exceptionally low levels measured by something like the VIX. As we come off the meds, as quantitative easing gives way to quantitative tightening, the Fed balance sheet is shrinking, and the other central banks of the world are gradually following. As interest rates go up, and they go up again and again, we are entering, as it were, normal monetary conditions. And that means that normal volatility will be back. And if you've been in the markets for less than 10 years, this is going to come as a bit of a shock.
Also, you warn that the winter is coming for over-leveraged economies, especially if real interest rates go up. Now, which countries would you be watching?
Well, the Bank for International Settlements did a good dashboard last year, arguing that there were economies out there that in various ways were exposed to rising real interest rates. This is a key point for your viewers to get. Nominal rates can go up, but if inflation goes up by the same amount, it's not really a meaningful change for anybody who's in debt. But if nominal rates go up and inflation stays relatively low, which is what's been happening in the United States, then you find that the actual real cost to you of those debts is going to go up. And that's going to be a very, very painful situation for a lot of people, because the world economy is more leveraged than it was 10 years ago on the whole. Governments have more debt, and many parts of the world have increased corporate debt. This is why China is really crucial. It doesn't massively matter to the rest of the world if Turkey goes into a tailspin, or Argentina, two countries that have been very badly affected this year by the changing condition, the strong dollar in particular. But let's watch watch China, because China's now the second largest economy in the world, by one measure the largest. If China starts to feel the pain, it's highly leveraged as a result of the policies they pursued during the crisis. There's lots and lots of debt out there, probably a heck of a lot more non-performing loans than anybody wants to admit. Then that will have meaningful repercussions, not least for Australia.
You mentioned that the situation we find ourselves in now globally compared to pre-financial crisis is more fragile. Now, partly that's presumably because central banks don't have the buffer they once had, but you also mention increased regulation and what a real impact that might have.
Well, a lot of effort over the last 10 years has gone into trying to learn the lessons of the crisis and come up with solutions so it doesn't happen again. The problem is I'm not sure we've always drawn the right lessons. There was an enormous focus on bank capital adequacy, and so great efforts have been made to devise regulations like Basel III or Dodd-Frank to make banks have more capital. And that's fine. That addresses one of, I would guess, roughly 6 reasons why we had the crisis. But it
might make it tricky
So here's the problem. I mean, not only does this extremely heavy burden of regulation act as a brake on economic recovery, but more importantly, things have been put in place that if they had been in place in 2008 would have made it much harder for the Fed to do what it did. So Dodd-Frank makes it harder to deal, I think, with a major financial institution getting into trouble, because there's now a very explicit resolution mechanism that you have to go through. The Fed had all kinds of discretion in 2008. It let Lehman Brothers go and then it bailed everybody else out. Now, that wouldn't happen again if a so-called SIFI, a strategically important financial institution, got into trouble. The Fed is constrained in ways that it wasn't in 2008, 2009. And that may seem like a good idea now, but I worry a little bit that if we were to have another major financial crisis, the rules are actually more rigid now, and it might in fact be harder to take the medication and give it to the patient the way that the Fed did in 2008.
Niall, I should ask you to finish. You obviously love this space, financial history, and it's not just your latest update of the Centre of Money, but also I'm thinking right back to Rothschild and Warburg, Colossus and Empire. You've got your own business, which is in high-end, I suppose, financial advisory. What are your clients? Who are your clients, and what are they looking for from?
Well, I have a modest advisory business that works with some big asset managers around the world, and these are companies that
presumably the biggest.
Some of the biggest, and these are companies that have, I think, drawn the lesson from 2008-2009 that it does help to have historical perspective as you're thinking about both macroeconomics and geopolitics. And I think the way that I've approached these problems over the years has been to really try to do them together, because you can't just think about the world strictly in terms of economics. You have to remember that often politics dominates. That was very true in the Eurozone crisis a few years ago. If you were an economist, you thought, oh, well, of course, the European Monetary Union is going to fall apart. Look at the Greeks, they're in such a mess. But politically, it always seemed to me unlikely that Germany would let the monetary union fall apart. It had too many advantages from Berlin's vantage point. So what I try to do is to think historically as well as economically, to think geopolitically as well as financially, and try to help the people that I talk to think about contemporary problems in historical perspective. We started out talking about the midterms. Historically, it's extremely difficult, very rare indeed, for the party of an incumbent president to do well, to actually gain seats in the House of Representatives after 2 years. That almost never happens. There are only a couple of occasions since the time of Harry Truman when the president's party has not lost seats. So history helps you understand that it's pretty unlikely that the Republicans will hold on to the House of Representatives. But that also tells you that if it happens, if we have another surprise, like the one that most people got 2 years ago when Donald Trump, against all expectations, won, then something's fundamentally changed. So history leads you, I think, to attach better probabilities, more accurate probabilities to scenarios, but it also reminds you that things don't always go as the models predict, and sometimes it is different, whether it's financially or politically. So watch out. I mean, I think it's highly likely, historically, that the Republicans lose the House and that we are back to divided government, but there's just a chance, as there was 2 years ago, that something very surprising is about to happen.
Niall Ferguson, so good to talk. Thank you.
Thank you, Ticky.
Great to interview. After the break, an energy roundtable tomorrow set to set the big energy retailers go head-to-head with the Energy Minister, Angus Taylor. We'll get across what to expect with the Australians. Perry Williams next.
You're watching Ticky on Your Money. Now, back to Ticky.
Welcome back. Well, all eyes will be on the energy retailers tomorrow with a major round table with Federal Energy Minister Angus Down Taylor expected to get heated. The country's three biggest retailers, gentailers really, AGL, Origin and Energy Australia, are expected to urge the government to widen its drive for price cuts to the rest of the supply chain, including network charges, green subsidies and rising wholesale tariffs. Well, for more on what to expect tomorrow, I'm pleased to welcome the Australian's senior business writer Perry Williams, who joins me live at the desk. Perry, this is all getting a bit tense, isn't it? Tell me about the parameters first, because what these retailers have been asked to do to start off with, keeping the pressure down, is by January 1 they've got to get prices down, yeah? Yeah,
I mean, Angus Taylor came out, I think even within his first few days as minister, and, you know, threatened the big stick, yes, and quite quickly said prices have got to come down. Yes. And he's now following that up with this roundtable and one-on-one meetings, and he's saying by January the 1st, prices have got to come down. That's quite a big issue for the retailers.
Why?
Well, they've actually just, for most states, prices just came down June 30. So this is sort of being described as an out-of-cycle cut, if you will. So what he's asking for is almost the impossible, another cut 6 months rather than 12 months, you know, after the previous one. So yeah, it's a pretty tall order.
When
for
you
the companies.
Say it's impossible, it means that it would be hacking into profits.
Yeah, it would be hacking into profits, and there's now a pretty furious debate, you know, amongst the components that make up the power bill about exactly who's responsible, and you know, whether there's any provision to actually pass these cuts on to customers.
And as I understand it, the network companies, Ausgrid, the Transgrids, those that they've had something to say this afternoon. Yeah,
indeed. So they've come out today, Ausgrid, Transgrid and Endeavour, three of the big network companies. Now, the reason they've come out is they're often sort of seen as taking the blame for a lot of these costs.
That was the gold plating stuff that we
talked about. Yes, indeed it was. And they've come out today and said, look, we used to be responsible for about half the cost of the power bill. That's come down to around about 40% in the last 3 years.
We've done our bit.
Yeah, we've done our bit, and our costs, our costs have also come down as well, yes, and it's now up to the retailers to pass that through. So they've sort of, you know, ahead of the meeting, they've kind of said, look, we've done our bit, and over to you, power companies. So it sort of sets the scene for a pretty fascinating day tomorrow. Okay,
so that's just on the price side. Now, over and above that, Angus Taylor also wants particularly, I would imagine, the gentailers to play an important role in helping him firm up electricity supply. Yeah. Can you just explain what he'd like of them?
Yeah, sure. So that's this idea that actually was first recommended by the ACCC boss, Rod Sims, in the report earlier in the year. And the idea was that the government could help to sort of financially underwrite new generation in the system. So that'd almost be a sort of a financial backer, if you will, of the sort of contracts which help to sort of prop up generation. Often companies get a bit nervous if they go out and build these big things and they don't know who's going to buy the power. So the government said, yes, we can step in to underwrite that new generation. We don't know a huge amount about the details of that, but the government's quite keen on this ACCC recommendation, yes, and they've added it as an agenda item tomorrow, so they're spending a couple of hours tomorrow afternoon.
So when you say unright, I mean, as you say, we don't know much about it. The ACCC recommends it, but this is to encourage investment, presumably in alternative energy. But then somehow get the requirement that you have some sort of either storage, battery, hydro, something that makes, or gas or coal, yep, something that makes it that it makes it reliable. That comes together, and that there is an investment to create that new renewable energy, by making sure that somebody's buying in year 10, 15, 20?
Yeah, sure. And look, the government's been quite clear, and they've said, look, it's technology neutral. So they don't, some people have said, oh, this is all about, fair dinkum power. Is it a new coal-fired power plant? The government has said, look, we're not favouring any particular type of generation,
yes,
but we need more generation and we need more varied sources of generation. So, I think the big three, AGL, Energy Australia and Origin, control about 60% of generation in the national electricity market. The ACCC see that as a problem, and
yes,
this is one way to get more sources of supply into the system.
So are we suggesting that there's going to be some sort of breakup?
Well, that would be last resort, a breakup. Obviously, we've seen the fear of that happening, reflected in the share prices of some of these big companies, in the last few months. I don't think, a Liberal government's going to go that far, but it's interesting.
Even though they've given that power to the ACCC. Yeah,
well, it's interesting they've occasionally referenced it, and they've got it in their back pocket should they need it.
Yeah. So the other thought that you mentioned there is that government is technology agnostic, so it includes new coal. Now, realistically, given how fast the price of alternative energy has come down, to the surprise of everybody, and also how achievable this matching, this firming up of that energy is going to be, would anyone in their right mind today build a new coal-fired power station? Surely. I mean, really, would they? Anybody in the private sector today?
Yeah, look, it's there've been few and far between companies that have actually put their hand up and said, yes, we would put that sort of money forward. I mean, I think you've seen the likes of, Trevor St Baker's come out and said he'd look at it. I think that's very different to someone actually proceeding with it. You're looking at $3 or $4 billion, and the danger.
And it'll take, unlike alternative energy, it'll take a long time to get up and running.
Yeah, the danger is 4 or 5 years to get up and running, and in the meantime, renewable costs keep coming down.
Yeah. So why is it even part of the debate? I mean, just from a business and a sort of sensible point of view, never mind whether you're anti-coal or not anti-coal. Why? I mean, we can be pro the coal that's there, but why are we even entertaining the idea of a new coal power station just on the numbers? It's just not practical.
Yeah, and look, I think this stretches back to the difficulties the government had on Liddell and their failure to get AGL to extend that plant. Obviously closes in 2022. So I think the idea sprung from that, and obviously it's happening in parts of Asia, but Australia's a very different market, and I can't see it happening.
And then there's this other notion that another problem that Angus Taylor has got is this hollowing out of existing coal-fired power stations, even if they do have a life to a certain year, say 2040, that as a business model they might not actually work before that because of the firmed up alternative energy that gets thrown in. Yeah,
exactly. Yeah, so I mean, coal, still provides about 70% of power in the national electricity market. I think in 10 or 15 years, yes, it will still be there, but that percentage will come down quite dramatically, and it'll be interesting to see if if you get other players like Trevor St Baker, making sort of opportunistic attempts to keep other plants open.
But from everything you're saying, it will be quite tense between the Jen Taylors and the Minister tomorrow.
Yeah, I think so. Yeah, part of the problem is Angus Taylor came in, very, very much from the start and said he wants prices down, and he's got this big stick. And then he had to try and sort of soothe relationships with the companies. So tomorrow he's going to see, what the reaction's like.
Perry Williams, very interesting. Well, we'll follow that tomorrow. Thanks very much for bringing us up to speed there. Well, the Prime Minister has criticised Victoria for pledging to sign onto a Chinese infrastructure scheme. Scott Morrison said he was surprised by the move, which has national implications. More from Sky News political reporter James O'Doherty.
Marise Payne is travelling to Beijing to take part in a forum with her Chinese counterpart. It's a visit that coincides with a trip from the Trade Minister, Simon Birmingham, the first ministerial visit to China in more than a year. Marise Payne says the visit is a chance to build on earlier discussions between the pair, most recently on the sidelines of the UN General Assembly.
Obviously, we have a very substantial relationship, and it works in the interests of both sides, and we're committed to building on our comprehensive strategic partnership, which provides a very solid platform for the relationship in the broad.
But the fact that the Foreign Minister is travelling to China marks a thawing of a relationship that has been on ice in recent months. Beijing hitting back at Canberra over perceived slights regarding the Asian superpower's growing influence. One way China is seeking to increase its influence around the world is through President Xi Jinping's Belt and Road scheme. It aims to revive ancient trade routes to create a 21st century Silk Road. Australia has not signed up to this scheme, but the state of Victoria now has. Speaking ahead of the Foreign Minister's visit to China, the Prime Minister criticised that decision for its lack of consultation.
Well, I was surprised that the Victorian government went into that arrangement without any discussions with the Commonwealth government at all, or taking what would seem any advice from the Commonwealth government on what is, a matter of international relations. They know full well our policy on those issues, and I thought that was not a very cooperative or helpful way to do things on such issues.
The Prime Minister careful not to criticise China with these comments, despite some concerns about the Belt and Road Initiative. With signs the bilateral relationship is again warming, Scott Morrison would be careful not to do anything to be put back in the cold. James O'Doherty, Sky News, Canberra.
Well, also, the Morrison government has dismissed reports Australians could be forced to the polls twice next year. Fairfax has been reporting this morning that Scott Morrison is considering holding a Senate election early next year, followed by a separate poll for the House of Representatives later in the year. The move would give the federal government more time to gain support after a slump in opinion polls following the leadership spill. But the Prime Minister insists there are no such plans.
We've got no plans for that. I mean, that's just more Canberra bubble chatter. Yeah.
Do you think that if you did split the election, the voters would punish you for that?
I think it's Canberra bubble chatter.
So I don't rule it out?
I've said we've got no plans to do it. Yeah.
Well, the election timing is up to them, but somebody has briefed this out to a journalist. Somebody in the Liberal Party has been thinking about this. They are desperately scrabbling around looking for ways to extend Mr Morrison's term, to hang on to power. They really need to just accept that at some point they're going to have to face the verdict of the Australian people.
And in Sydney, the Lord Mayor has unveiled a bold new plan aimed at reinvigorating the city's nighttime economy. As Sky News reporter Julia Bradley explains, shops and businesses in central Sydney would be allowed to trade around the clock.
Clovermore hopes her new nightlife plan will set the foundation for Sydney to become a 24-hour global city into the future. The proposal follows the first review in a decade of planning controls that decide trading hours across the country. It's proposing the extension of 24-hour trading across the entire CBD, from Darling Harbour to Hyde Park and south to Central Station. Under the plan, shops and businesses such as small bars and restaurants in inner city areas will stay open until 2 a.m. This includes popular social hubs like Glebe and Surrey Hills. There's also a plan to create a new cultural precinct in Alexandria, as well as new trading areas in Barangaroo and Green Square. The Lord Mayor also wants to reduce crowds, queues and noise at hotspots in Newtown and on George Street. The plan won't affect the New South Wales government's controversial lockout laws, but it does hope to breathe life back into Sydney's nighttime economy. Julia Bradley, Sky News, Sydney.
Well, a couple of weeks ago, we covered the Everest in New South Wales. Now, today, of course, was the day of the race that stops the nation. Cross Counter has won the 2018 Melbourne Cup in front of a rain-drenched crowd at Flemington Racecourse. Here's how the race shaped up.
Ventura Storm and Rostropovich, 300 to go. It's Finch with a Prince of Arran on the outside. Rostropovich is running on, and Marmello back to the inside too. A Prince of Arran at the 200. Marmello wearing it down. Marmello gets up on the inside, and here comes Cross Counter. Cross Counter coming at Marmello. Cross Counter's flying. The Blue Army have done it at last. Cross Counter has won the Melbourne Cup from Marmello, a Prince of Arran Finch.
Exciting finish there. After the break, we'll get across the latest on the US midterm elections.
This is Ticky on Your Money, covering the big business stories.
Welcome back. Well, let's go back to the midterms again, because several US television networks have blocked a controversial Republican attack ad on the eve of the elections. The piece focused on the immigrant caravan which is heading north to the US border. Decision comes as President Trump ramps up campaigning and admits the midterms are effectively a referendum on his presidency.
Facing a referendum on his divisive administration, President Trump is going all in, with rally after rally on the final day before the midterms, punching hard even if voters have grown weary of all the jabs below the belt.
They want America to be a giant sanctuary city for drug dealers, predators, and bloodthirsty MS-13 killers.
Earlier in the day, the president tried to sound optimistic, even as he acknowledged his party in control of Congress could be in trouble, chalking it up to some historic headwinds.
I think the Senate, we're doing very well, and I think we're going to do very well in the House. If you look over 100 years, for whatever reason, the party with the president doesn't do very well. I think we're going to do pretty well.
Mr. Trump embraced the midterms as something of a report card for his own presidency.
The key is you have to go out to vote, because in a sense, I am on the ticket. You got to go out to vote.
The president has gambled on the risky strategy of tapping into conservative outrage over immigration. His racist TV ad falsely portraying a caravan of migrants heading for the border as an invasion has been rejected, not only by CNN and NBC, but also by Fox, Mr. Trump's outlet of choice. When pressed on the offensive nature of the ad, the president pushed back.
I don't know about it. I mean, you're telling me something I don't know about. We have a lot of ads, and they certainly are effective based on the numbers that we're seeing. Well, a lot of things are offensive. Your questions are offensive a lot of times.
The president is still trying to gin up concerns over voter fraud, even after his own administration appointed a commission to study the issue and failed to prove it's happening on a large scale. Still, Mr. Trump tweeted, law enforcement has been strongly notified to watch closely for any illegal voting, which may take place in Tuesday's election.
All you have to do is go around, take a look at what's happened over the years, and you'll see.
But the bogus claim fits right into the president's midterm playbook as he pounds the topic of border security.
And I noticed all that beautiful barbed wire going up today. It was barbed wire used properly can be a beautiful sight.
Beautiful barbed wire. Well, the US has announced it is reimposing and expanding its sanctions on Iran. The sanctions target the country's energy, financial and shipping sectors following US President Donald Trump's withdrawal from the 2015 nuclear deal.
The United States is now reimposing all sanctions on Iran lifted by the 2015 nuclear deal.
The Iranian regime has a choice. It can either do a 180-degree turn from its outlaw course of action and act like a normal country, or it can see its economy crumble.
These sanctions are now the second round of reimposed penalties since President Trump pulled out of the nuclear deal in May.
Today we sanctioned more than 700 individuals, entities, aircraft and vessels as part of Treasury's largest ever single-day action targeting Iran.
It's a day that's been a long time coming for the Trump administration ever since it pulled out of the nuclear deal. Even President Trump tweeted out a Game of Thrones-style image of himself on Friday saying sanctions are coming. And now that November 5th is here, there's been swift reaction around the world. For starters, in Iran, President Hassan Rouhani isn't planning to play along.
We will break the sanctions with honor, because sanctions are cruel, are against the international law, are against agreements, are against UN resolutions.
After the 2015 nuclear deal went into effect, the United States' own State Department certified several times that Iran was sticking to its end of the deal. And it's a deal that many countries still support, including France, Germany, the UK, Russia, and China. All of them largely disagree with the U.S.'s latest decision.
And North Korea has threatened to build up its nuclear arsenal if the United States doesn't ease sanctions soon. The statement was made ahead of high-level talks and have sparked concern negotiations on North Korea denuclearization could actually break down.
Kim Jong-un's regime issues a threat to America. Just days before Secretary of State Mike Pompeo meets Kim's top intelligence official in New York, North Korea's foreign ministry warns the regime could start building up its nuclear forces again if the U.S. doesn't ease sanctions on North Korea.
North Korea always, before a meeting, tries to gain leverage by perhaps issuing threatening language or insinuating a threat. You know, that said, we don't want to just dismiss it as negotiating rhetoric. It does reflect their position. It also reflects the stance that they have, that they don't want to give up much.
The North Koreans believe they've already given up a lot. They've returned American remains from the Korean War.
How does it feel to be home?
Released some Americans who were detained in North Korea. They've destroyed a missile engine test facility, blown up the entrances to their main nuclear bomb testing site. But experts say some of those moves are cosmetic.
It in no way impedes the continued development and expansion of their nuclear arsenal and their missile arsenal.
Still, the North Koreans believe these have been uneven trades, and they want the Trump administration to ratchet back crippling sanctions before the regime scales back more of its nuclear program. But Secretary Pompeo is resolute.
Stray voltage happens to be all around us. We're very focused. We know with whom we're negotiating. We know what their positions are. And President Trump's made his position very clear. No economic relief until we have achieved our ultimate objective.
President Trump had gotten credit from North Korea experts for meeting with Kim Jong-un and getting the North Koreans more engaged in dialogue. Analysts are split tonight on whether that's all falling apart.
We're about as far apart as you can get. 5 months after the summit, we don't even have an agreed upon definition of what denuclearization is.
And experts worry that North Korea's new threat to again, quote, build up its nuclear forces may mean they'll start testing re-entry capability for their long-range missiles that can reach the United States.
If they do test, everything will come to a halt, and we're really back to where we were a year ago.
A year ago, when there was talk of a possible U.S. first strike on North Korea if they kept up their threatening behavior. Tonight, experts say Kim and his aides will also be monitoring America's big day on Tuesday.
They always watch midterm elections very closely, and they want to see how much the incumbent in the White House, does he have support? I think they're looking for whether President Trump gets weakened or not.
Moving to China now, and Chinese President Xi Jinping has weighed into the ongoing trade wars with the US. Speaking at a trade expo in Shanghai, the president vowed China was open for business, promising lower tariffs and a streamlined customs process.
China is open for business. That's the message President Xi Jinping is trying to sell at a big expo this week, while Beijing fights an escalating trade war with Washington. President Xi on Monday kicked off the first ever China International Import Expo with a promise.
China will lower tariffs, make customs clearance more convenient, reduce institutional costs in the import sector, and speed up the development of new business models.
Thousands of foreign companies have flocked to the expo in Shanghai, hoping to find a foothold in the world's second largest economy, with products from coffee to cars to crude oil. China's market for imports is growing, bringing in $1.84 trillion worth of goods in 2017, up 16% from the year before. The expo comes as Beijing is under fire from countries like the United States, which feel they're getting the short end of the trade relationship. President Xi seemed to be trying to change the conversation, vowing to keep opening up sectors from education to telecoms.
China's open door will not close. It will only open wider, and China will not stop taking steps towards building a community with a shared future for mankind.
But in spite of the promises, critics don't expect a big shift in Beijing's trade policy anytime soon. Some Western diplomats and businesses say the expo is nothing more than window dressing for Beijing's long-standing trade abuses.
After the break, the Reserve Bank leaves rates on hold again for a 25th consecutive meeting. We'll get some analysis with AMP's chief economist Shane Oliver next.
Now, back to Ticky.
Welcome Welcome back. Well, the Reserve Bank of Australia leaving interest rates unchanged at a record low of 1.5% for the 25th consecutive meeting. RBA Governor Philip Lowe says the economy is seeing reduced unemployment and that a gradual return to inflation target is expected. Unemployment has fallen to 5%, a level historically suggesting full employment. Inflation, however, remains weak, below the bottom of the central bank's 2 to 3% target. Well, Governor Phil Lowe also flagged the risk of falling property prices, which he says could prompt households to boost savings at the expense of consumption. Despite all this, forecasts for economic growth have been revised higher, with GDP growth to average around 3.5% over the next 2 years before slowing in 2020. And for more Your Money, Chief Business Reporter Leo Shanahan spoke with AMP's Chief Economist Shane Oliver just a little earlier.
I think they are too relaxed. If you read the statement, it's pretty benign. In fact, they seem upbeat about things, talking about stronger growth, good global conditions, unemployment coming down to 4.75%. Now, they do acknowledge the risks, but I don't know that they're giving them enough airplay here. Obviously, China is a big one there. We're seeing day by day slower growth in China. I don't think it's going to collapse, but it is a key source of uncertainty. We're seeing in Australia a steady collapse, or a steady fall, I should say, in Sydney and Melbourne property prices. It could turn out to be a collapse, but that's a huge risk. We're seeing very tight credit conditions, and the Reserve Bank seems very relaxed about all of those things. So my take on it is they're going to say yet again that the next move is likely to be up, but I'm increasingly coming to the view that maybe that's wrong and the next move will actually be a cut.
Yeah, on housing, I mean, they do make mention of the slowing and significantly for investors. They seem to be saying, well, it's getting bad for investors or it's been tricky for investors, but really first home buyers are in a better position. What do you think?
Well, don't forget, first home buyers traditionally in Australia have been a relatively small part of the market. Maybe they shouldn't be, but that's the reality. And so you've squeezed bigger parts of the market who are paying higher borrowing costs, facing much tougher conditions, particularly if you've got multiple loans to an investor. Yes, there will be some help from first home buyers, but I don't think it's going to be enough in here to stop an ongoing decline in prices that's probably going to stretch out over the next couple of years. And when you see that happen, it goes on for a while, you get a wealth effect. This is not just a one-year wonder. This goes on for a little while. People feel poorer, and when they feel poorer, they're less inclined to run down their savings, more inclined to hold back when they're spending, which in turn means it's going to be harder for companies to put their prices up, even if wages do pick up, but I don't think they will, which means it's harder to get inflation back up.
Yeah, on that subject, there doesn't seem to be a great deal of joy on wages or inflation either.
Not so far. We're still waiting for that pickup in wages, and I think we're still going to be waiting for a long time on inflation. This has been the story for several years now, that as economists and the Reserve Bank, we'd all been too optimistic on when inflation would pick up, and it keeps getting pushed further and further out. I mean, it's true the Reserve Bank could say, well, they anticipated soft numbers in the September quarter because of the cut in childcare costs effectively to average households because of a government change, but by the same token, the underlying measures of inflation were also extremely low, and it's very hard to see what's going to push them up.
Yeah, on some macro issues, you mentioned China, the China-US trade, the trade war, but also we've got midterms tonight in the United States. What are you expecting, and how concerned do you think the RBA is on the United States? Because they certainly make mention of it.
They certainly did. The main concern, I guess, about the United States is just how tight their economy is. It's a very different problem to Australia. They got a very tight economy. Wages growth is edging up, and obviously the Fed will continue to raise interest rates, which I think will happen, and then ultimately that will push the Aussie dollar even lower. In terms of the midterms, the market expectation is that the Democrats take control of the House, the Republicans can keep control of the Senate. So anything different to those two, we'll see a significant market reaction. If Republicans keep control of both, then markets probably celebrate. If Democrats get control of both, then markets won't be too happy. I think at the end of the day, though, the midterms are just a hurdle to be jumped by President Trump. He'll just move on to something else after this. If they lose the House or both houses of Congress, then obviously we won't get more tax cuts out of the US, but Trump can still pursue his trade agenda. He can still deregulate the economy. There's still lots of things he can do.
Domestically again, I noticed GDP forecasts were just upgraded a tick. Your thoughts on that?
I think that's largely a function of the fact that the last couple of quarters have been stronger than expected. So growth for the year to the June quarter was 3.4%. But So they had to make a change anyway. What they've done is extend that into 2019. That is a bit of a surprise to me. They're talking about 3.5% in 2019 as well. That, I think, is probably a bit overly optimistic. You sort of wonder whether they thought about the wealth effect at all, which will be a big drag going forward. Or maybe they're assuming the politicians in Canberra will come up with another bigger tax cut to get things going. But I just find it very hard to see what's going to keep growth at 3.5% in 2019.
Now, the statement of monetary policy is on Friday. Are you expecting basically a more expansive version of what we've just read? Anything new, you think?
Well, that will be it. There will be 70 pages there, or whatever it is, 68, 70 pages as opposed to 2 today, so a lot more to read. But obviously those bits around the growth assumptions, around unemployment, but particularly around housing, I think is where the focus is going to be, what people will be looking at. And housing, to me, is the key in all of this. How much this tightening credit conditions continues, what's the risk of a credit crunch, and what is the flow on of that to housing. That, to me, is the biggest single risk facing Australia.
And finally, Shane, you seem to be moving into the camp that the next move is down.
I'm getting there. I don't know that I'll quite there yet, but I'm certainly thinking that's the direction we're going in. Sure, there's good things in Australia. You don't want to be overly negative on it, although I did get worried when I saw that cover on The Economist magazine a week or so ago.
It's a bit of a jinx, isn't it, that one?
A bit of a jinx. You know, you wonder if it's like another Brazil. Just look at the 2009 Economist cover on Brazil. But by the same token, as The Economist pointed out, there's a whole bunch of things which are positive in Australia. There's another bunch of things which work the other way, which means we're stuck in this sort of middle zone, not quite good but not quite bad. And I think that's probably where we continue to be. It's just that I think that the needle is tipping over a little bit on some of the indicators, which suggest to me, yes, the next move may well turn out to be a cut.
All right, Shane Oliver from AMP Capital, thanks so much for joining us.
My pleasure, thank you.
And that's all for the show tonight. Tomorrow night, Nigel Lake, chairman of Pottinger, will be speaking with Nigel direct from New York in the midst of the US midterm election. See you tomorrow night at 5 p.m. on Channel 95, or tonight catch us at 8 p.m. on Channel 604 on Foxtel. Thanks for your company.